I mean, the one thing I have learned in life is that time is short. You want to do things you enjoy. You want to do things where you have an impact. You want to do things with passion. And as a result, I decided not to work for a big corporate.
With the benefit of hindsight, do you feel that having gone through the Nautil experience relatively early in your career, that it gave you a degree or a level of resilience which actually helped supercharge your future success in your career?
That's a very good question. You know, I will try to rationalize what was not so rational back then.
The selling statement for this episode is, since you joined Keensight, you've never said no to the Beatles.
A few years before, I was a young potential millionaire. And then, all of us had nothing left, you know, and everyone was getting fired.
So Philippe, welcome to Life of a Dealmaker. This is the first episode being filmed outside of the British Isles. Obviously, we Brits, post-Brexit, have to make a bit more of an effort to stay connected with our European counterparts. So here we are in Paris. Great to have you on the show. Now, I normally start these episodes by diving straight into the guest's career, whether that be the start of their career or a pinnacle or a point at which they found really impactful. I feel like it'd be quite negligent of me not to start this particular one in a week of unprecedented macroeconomic changes, to start with that. So in an era where we are all constantly having to shift and change based on decisions being made at the moment, particularly by the White House, how do you begin to try and grapple with and ultimately try and react positively to changes that you see in a dynamic way?
Well, it's an interesting question to start with. As a matter of fact, I mean, Keensight has been around for, I guess, between 20 or 25 years, actually. And we have gone through a lot of cycles. We have gone through different crises. And what we have tried to build at Keensight is actually a strategy where we only invest in extremely resilient subsegments of the market. I mean, we invest in fast-growing and highly profitable companies in the tech and healthcare space with a B2B focus. But we really try to identify companies that are extremely resilient. The goal being to actually build, resilient portfolio. And as a result, it's very difficult to know what will happen, right? I mean, it's been just a few days. And if you ask me how things are going to evolve, I have absolutely no clue. What I know for sure is that the portfolios we have built over the years have always gone through cycles, you know, and while delivering consistent performance. So at Keensight, rather than trying to guess or to react to something where honestly I have no clue what will happen, what we try to do is to make sure that the companies we invest in will go through these cycles, you know, and deliver the same kind of performance than what we had before.
Yeah, I mean, it's an interesting perspective because it almost feels like, to a degree, given that's your strategy, that maybe there is also, I think it'd be an overreach to say there's a benefit, right? But there's a degree of benefit in terms of, in a competitive marketplace, there's lots of European mid-market PE firms, but where you have purposefully built a strategy around not being exposed to certain macroeconomic factors, that actually you may perform better than competitors. Is there a feeling of that?
Well, as a matter of fact, as I said, we've been investing for the past 25 years, and over time we have done something like 51 exits on 72 investments, and on average we have delivered a gross multiple of 3.4 times and 39% of IRR consistently over the time. And if you look at the spread of our performance, I mean, actually, we have never lost any money on in the growth buyout space, which is the segment we invest in.
Yeah.
And we have a very consistent and stable kind of performance on each of our portfolio companies. So I think what LPs like with our strategy, it's not only the fact that it delivers very good performance, but it's also that it's extremely, it's not volatile at all, and we deliver very consistent returns. through different cycles and through different crises. So again, to go back to your initial questions, of course, we pay attention to what's happening. We try to identify any impact it could have on a portfolio, but we are really not focused on trying to guess what will happen in the future. We are really focused on investing in companies that are operating in a market that has grown over time, even through the cycles, and that will continue to grow.
Yeah. And a slightly tangential question, but this is even before the Bain & Company report came out, before the recent tariff changes. And there was a statistic in there, which I think 2024 fundraising for the private equity sector was down, 23% on 2023. You raised a fund in 2023, almost €3 billion fund. How do you, when you see statistics like that, does that worry you, concern you?
No, because, and again, I don't want to be arrogant at all, of course, but as a matter of fact, our last fundraising went fairly quickly. What LPs like about us is the fact that, as I said, our performance are very consistent. Yeah. They know what kind of performance they will get when they get into our funds. And we also have a very clear and precise strategy. We never make any exceptions. We invest in fast-growing, highly profitable companies in the tech and healthcare space, B2B, addressing international markets. And these few criteria, as I said, we never make any exception. The reason being that they have been, these criteria have been designed by our experience, going through the cycles. And for example, the reason why we invest in a certain size of company, generating at least 20 or 30 million euro of revenue, is because we know that within these companies, the technology is proven. The technology has been deployed, it has been tested by a number of customers, and as a result, we don't take any technology risk. Same way, as I said, by investing on long-term markets, we make sure that we don't take any market risk. We don't want to invest in markets where maybe one day it will take off, The market has been proven and it will continue to grow over time. And there are a number of risk mitigations we take, including being reasonable on leverage, not hindering the growth of our companies, making sure that we have enough potential buyers at exit. So we every time we invest in a company, we make sure that we can identify strategic buyers, only investing in highly cash generative business. Those are a number of parameters that make our companies extremely resilient, and that enables us to create this resilient portfolio that ultimately will deliver this very consistent performance. And the reason why we have been able, to go back to your questions, to go through this fundraising quite efficiently, is because this strategy is extremely clear, extremely precise, and LPs know what they will find when they invest in our funds.
Yeah. So now segueing into your career, which is where I usually start, and I'm quite excited about this section with you in particular, because often I have to find ways to make quite a traditional route into private equity sound interesting, whereas yours is actually a bit different. So you began in terms of higher education, you started by going down an engineering route.
Yeah.
What was when you were deciding what to do at higher education, what was it that led you to engineering?
That's a very good question. I will try to rationalize what was not so rational back then. To be honest with you, as a student, I had absolutely no clue what I wanted to do. Being in high school in France, I was good at science. I liked it. Actually, I like sciences. I liked technology. And as a result, like many people in high school in France who are good in science, I decided to go for an engineering school. So I did Polytechnique, and then I did another one called Télécom Paris, which is a tech-focused engineer school, where I specialized in different areas, including optical networking. And then I did my first big internship in Nortel Networks. So, for those who don't remember Nortel Networks, it was like really the very massive Canadian networking equipment company, which disappeared when the internet bubble bursted.
2013, was it around then?
I think it was back then. I don't remember when Nortel went bankrupt, but basically you have to understand, and sorry if I look old when I say that, but in the 90s you had like these huge telecom players. You had Nortel in Canada, you had Alcatel in France, you had Lucent in the US, and most of them have actually disappeared today in front of Chinese giants like Huawei or ZTE, which is quite interesting. But it's another story. And to go back to Nortel Networks, I did my internship there. It was extremely interesting. Nortel was a great company. They were the leader in the mobile networking space back then, but it was a big corporate, right? And there were so many inefficiencies, internal teams fighting, politics. I loved the internship. I hated this setup, And the decision I made back then, which was one decision I made, was to never work for a big corporate. The one thing I have learned in life is that time is short. You want to do things you enjoy. You want to do things where you have an impact. You want to do things with passion. And as a result, I decided not to work for a big corporate. So at the end of Telecom Paris, we were back at the end of the 90s. I decided to join a startup. It was extremely exciting. We were less than 20 people. We were producing optical networking equipment, which was one of my specialty. And as we were such a small team, I was able to do many things. I was working on the marketing side. It was still, of course, highly technical products. I was also working on pre-sales, working with the sales team, which gave me a good exposure to business as well. And we raised a lot of money. The company was called LGT. And that was the first time that I was actually seeing venture capitalists, private equity guys around. I had never been close to these guys, and so we grew extremely quickly. It was extremely exciting. Everything you did had actually an impact, and it was really a lot of fun. We were then acquired by a US-based company called Corvis Corporation, which was one of the very visible company in the US in that space, a startup as well. And together, we went public in 2000. We raised, I think, $1 billion back then on the markets. Exciting times. But then, of course, 2001 came, and everything collapsed. It was actually a very dramatic ending. A lot of people getting fired, lots of people losing all their money because they had bought some Corvis stocks, as employees. It was really dramatic, and I think that was my first lesson in life. A few years before, I was a young potential millionaire. And then, all of us had nothing left, and everyone was getting fired. So it gave me a good lesson about how humble you have in front of success, and that things can go ugly quite quickly, if you are not paying attention enough. So back then, that's the point where having seen all these VCs around, and investing in our company, I thought, well, it sounds like fun, So I joined Partech, which is a French-American fund, to actually become an investor. It was my first time in life I was actually becoming an investor. And it was also a lot of fun, to be honest. The team was great. I had the opportunity to continue having this. What is the real direction in my entire career, this entrepreneurial spirit, because we were so close to entrepreneurs, for who I have a lot of admiration. And I spent five years with Partech. That's the second things I learned, which also gave a direction to my career and to what I do at Keensight. Venture capital is fascinating. It's a lot of fun. You invest in amazing companies. But as a matter of fact, you take so many risks when you invest in a company. You take a market risk, you take a technology risk, you take a management risk, that as a result, it creates so much volatility that it's very difficult to create very consistent returns, which was a kind of frustration for me. So in 2008, I had the opportunity to meet, I actually already knew these guys, but to work with the guys that would become my partners at Keensight, with the objective of investing in technology in healthcare, so to benefit from this very high growth that these sectors can generate, but at the same time, to only invest in highly profitable companies. And back then, it was quite unique in Europe to have this approach, but I found it extremely interesting because it was a great way to have the best of both worlds, right? Fast-growing companies, but at the same time, very resilient companies because they were highly profitable. And on top of that, it was also an entrepreneurial story because back then we were only 5 people. and I will speak about Keensight a bit, but we are today, around 120 people. So that's how the whole investor thing came and how I joined Keensight.
Yeah. So we'll obviously come back to Keensight in detail again later, but just there's quite a lot to unpack in that story. So I think just going back quickly to École Polytechnique, it's obviously a renowned academic institution for science and engineering. I've always personally had a bit of a fascination with these academic institutions which have a reputation for excellence, and it maintains over a long period of time. Obviously that school produced 3 French presidents. As part of my research into this podcast, I saw that also it ranks 7th in terms of producing Fortune 500 CEOs. Harvard is top of that list. So it's a very esteemed list to be in. When you reflect back on your time there, what do you think about how, and I'm interested in this because of how it might be translatable to the business sector, what aspects of the culture do you think there are that exist in a school like that which gives people the ability to really, aside from obviously recruiting the best in the first place, but then what is it that creates that culture of excellence? What is that day to day?
So first of all, I want to precise the fact that no one has offered to me the job of president.
Yet, Philippe.
But apart from that, it's an interesting question, and I think it relates a bit also to the French system. But first of all, something I would like to mention, because it was also, I think, in my life, something which taught me quite a lot of lessons. Back then, it has changed a bit since that, but back then, when you were joining Polytechnique, which is a military school, as you might know, you had to do 12 months in the army, which I did. And I think it's, when you go out of what we call preparatory classes, which are basically 2 years where you work like hell in order to get into these schools, and all suddenly they give you a uniform, and you have to be on the ground. It's a quite a learning experience, and I was a platoon leader back then, and I think in terms of management, going through the army is quite interesting as well. It teaches you very basic stuff, like acting. As an example to you, the guys you have to command, which is a very basic principle, but an important one. Also being clear and direct when you give orders, which I think is also something some managers could find inspiration is,
Yeah.
So it was quite a learning experience for me. But then to go back to your question, I think what it gives you is a few things. It's a culture of excellence, as you said. It's quite demanding to go into these schools, which means you have to fight hard to get into it, work hard, which, of course, in private equity, which is a quite demanding job, helps going through stressful times.
Yep.
And more generally speaking, I think it also on top of giving you a very good generic scientific background that when you invest in tech is always useful, also gives you this culture of always overperforming, which, as I said, I'm not arrogant enough to give people lessons on how they should conduct their life. But if you want to do things with passion, which is what I have always tried to do, this culture of overperforming is obviously quite useful. And
going back to the first lesson that you referred to, which is a mixture of those two things, humility, because you never know what's going to happen, and then we've been talking about shocks. That's probably one of the biggest shocks you've had to go through in your career. But with the benefit of hindsight, do you feel that having gone through the Nautil experience relatively early in your career, that it gave you a degree or a level of resilience which actually helped supercharge your future success in your career? Or do you think actually that skill set was already there, it just had to be brought out over time?
No, I think going through a number of experience and seeing a lot of different things, in terms of things that can go wrong. And from that perspective, venture is a quite interesting learning experience because you bet on a number of companies and most of them go ugly, right?
Yeah.
And only a few succeed. Teaches you that in order to build a resilient company and in order to identify resilient companies, you need first of all to have a very good basis, solid market, solid management, solid technology. and that if you choose the best companies, I mean, and if you have a very transparent relationship with the management as well, and that's something I will go back to, you can actually go through a lot of different cycles, you know, and I think that as a person, I mean, the experience we go through, of course, build the resilience you have to go through difficult periods after, because it enables you to take one step back and to identify the fact that if you have chosen the good bases, the good companies, and if you have a good transparent relationship with the management, it's much more easy to go through tough cycles, you know.
Yeah. And so then you get to Partech. Do you have a trigger moment that you can look back on where you think, okay, now, because you mentioned previously that you definitely didn't grow up thinking I want to be an investor, but do you feel like there was a moment which created the seed in your mind of actually, this is it, I want to be an investor? Or do you think that happened a bit more gradually over time?
I think it happened a bit more gradually, you know. I mean, I think that at the end of Partech, I mean, I was really enthusiastic about joining so Jean-Michel, Pierre, and Jérôme, the guys that would become my partners. Well, first of all, because I loved the idea of going into these fast-growing but very profitable companies. I really like the guys as well, and when you build a business, you have to make sure that you go along well with the people you are going to partner with. But back then, I mean, if there hadn't been these parameters, I could have gone back to the industry, I guess. I also love the industry, you know. I mean, building a business from an operational standpoint is something amazing as well. And as a matter of fact, and I think it's very important in what defines Keensight, I mean, the 4 managing partners back then, I mean, we all had operational background, you know. I mean, we have all been in operational roles before actually becoming investors. And I think it created a lot of things within Keensight, a lot of empathy with the entrepreneurs we back.
Yeah.
And also a lot of focus on, for example, and we can speak about it later, our performance team, which is a team of close to 40 people, which are dedicated to actually support our portfolio companies operationally. And I think at this scale and with this size, it's quite unique in Europe as well.
Okay, so then you reach our capital management, as it was then, investment arm of Rothschild, and you said, you know, that it was important to you at that point to maintain that entrepreneurial spirit. Fast forward 5 years, I think it was, is when the management buyout occurs. So
yes.
To talk me through the process of that, how did those conversations start? What led you as a founding team to believe that now was the time to go ahead with a process like that?
Well, I mean, indeed, we spent we spun off from the Rothschild Group in 2013. Well, it was a very easy decision. I mean, we were already very independent within the Rothschild Group. I mean, we were really acting as an independent team. Back then, there was another investment firm existing within the Rothschild Group, which was called 5 Arrows. Yep. And at one point, the discussion was mostly around, you know, merging or becoming independent. And as I said, I mean, we all had this very independent mindset. I mean, the Rothschild Group is a great firm, and the relationship with them are excellent. But back then, we decided that we'd rather become independent and grow a firm the same way as we had done it before within Rothschild, you know. And yes, the name changed back then from Air Capital Management to Keensight, and we spun off. Which was easy because we were already very independent, you know, very independent structure. So it was just about basically buying the shares that Rothschild had, and we started Keensight as an independent firm, you know, but our objective was really to implement the exact same strategy. So really focusing on the European-based, fast-growing, profitable companies, addressing international markets. Within the healthcare and tech segment, and we have never changed our strategy. It has always been the same, and we have grown the team significantly indeed, as we are now today around 120 people operating from 4 different offices, so Paris, London, and we also have 2 additional offices in Boston and Singapore to support our portfolio companies operationally. But the way we have built this story is really by, first of all, as I said, keeping the same strategy, but also trying to keep the same DNA, being very entrepreneurial, being very efficient, trying to make sure that everyone that joins Keensight shares the same team spirit, share the same desire, to grow to grow the firm together.
Yep.
And if you ask me, the Keensight, over time has changed a lot, obviously. Running a 120 people company is very different from the firm we had 10 years ago. But at the same time, it has not changed a lot in the sense that we do deals the same way as we used to, and we invest in the same kind of companies.
And when you achieve scale like that, and obviously you've gone through great growth, it looks like a very exciting time to be at Keensight. Last year you had 20 new joiners, 20 promotions, 6 platforms. So it's clearly an exciting time to be there. But as you get to that size, you've talked a few times about entrepreneurial spirit. Does it practically become difficult to maintain that DNA that you referred to when the business becomes so big?
Everything is difficult.
Yeah.
I would love to tell you that things are easy, but when you grow a business, and that's why I have so much admiration for entrepreneurs. It takes a huge amount of energy. It takes a huge amount of time to build things and make them successful. I think on that front, we've been quite successful. And if you ask me, the one thing I am the most proud of and the most happy about my life is the team we have built. We have managed to gather amazing people, extremely bright, much brighter than me, by the way, and with the right team spirit. I cannot speak about my peers. I don't know exactly how they operate, but within Keensight, we always make sure that we focus on the right topics. That when we go for a deal, we do it as a team, and always with the same DNA, which includes passion. Our people are passionate about tech, they're passionate about healthcare, passion for entrepreneurs, humility in front of what these guys have built, a partnership in the sense that we always invest in companies where we can make sure that we are going to partner with the management. That's really what we are looking for. And so far, we have managed to keep the same DNA. And we are working hard to make sure that as we grow, we will maintain the same DNA.
So if I were to ask you about one of the usual questions I ask is career highlight, but it sounds like you're saying the thing you're proudest of is the team that you built over time. Is that also responsive to the question of what your career highlight has been so far?
Yeah, there are a few things. Keensight is obviously a huge. Brings me a lot of satisfaction. The team, as I said, the performance are great. I think we still have a lot of potential to go. And then on top of that, there are a lot of things in your career that matter. I think the relationship we build with entrepreneurs are very important. There are a lot of entrepreneurs that we have backed. I'm still in contact with them. Some of them have actually invested in our funds after we had exited.
Yep.
And I still see them on a regular basis. And I think the kind of relationship you can build with a guy when you have gone through so many different cycles is extremely robust, The only times in my life I have been disappointed by a deal, it's not necessarily a question of performance, because as I said, performance has been good overall. It's really about the kind of relationship you create with the management team. And there are very few times where the relationship was not as good as what I would have liked, that the transparency was not as good, and that's the only times where I was not so happy about the deal.
Yeah. Do you have a favorite deal? Is that an unfair question to ask?
It's unfair. It's like, I don't know how many deals I have done since I have started. I don't know, maybe between 25 and 30. It's very difficult to pick one, all of them are very exciting. Maybe I can give you a few highlights on what we have done recently.
Yeah.
Last ones I've been working on, and maybe I can take, maybe it's a good opportunity to also highlight the fact that we are really focusing on specific sectors. But of course, cybersecurity is fashionable, but it's a space we have been investing in for a very, very long time. We had investment, for example, in companies like eye tracing, which is leading cybersecurity service provider that we exited to Eurasio a few years ago. We have been investors in Link by Net, which is a cloud service company that we sold to Accenture, and which also had a very strong foothold in cybersecurity. And in 23, we also did a very interesting investment in Nomios, which is the largest European independent cybersecurity service company. Very exciting company as well, performing extremely well. And more recently, as you know, Tarun, we have invested in a very interesting Northern Ireland-based cyber software company called Meta Compliance. And these guys provide basically solutions, software solutions for the human risk management market. So basically the idea being that the vast majority of cybersecurity breaches come from human mistakes. But when you look at how much money is actually invested in human risk management solutions, it's really a tiny part of the cybersecurity investments. And it creates a huge market potential, for the companies addressing this space. And Meta Compliance is a company actually operating within this market. It's a European leader. And one of the reasons why we managed to make this investment is also due to the very close relationship we have managed to create with James and Neil, the CEO and the CFO.
Yeah. And then career, I think there's been a general theme throughout this conversation of every time you've come across a degree of adversity or something unexpected, you've repackaged that quite successfully into something which changes your career path, but taking the positivity from that. But is there a point in your career, and I know you've mentioned there have been times you've been disappointed in deals, that's to do with the fabric, with the management team, but is there a point in your career that you look back on personally to think that was a real low light, that was a really tough or difficult phase for me?
Yeah, I think the end of my career at Corvis, this optical networking equipment manufacturer, was really tough, because you have to imagine that when I joined for people that have not been part of this period, it's a bit difficult to imagine, but the end of the 90s were crazy. The internet bubble was really crazy times. And it was extremely exciting. When I joined LGT, which was acquired by Corvis, we have grown extremely fast, and we were working hard, so we created a lot of bonds with our colleagues as well. And then in 2001, when everything went ugly, we had massive layoffs, I saw a lot of my colleagues that had invested a huge amount of passion and time within the company, getting fired,
Yeah.
And as I said, some people had also taken some loans to actually buy shares of the company, and they lost almost everything, as the stock price went from, I think, above $100 to a few cents, and now it has been tough, because it has been like between 2001 and 2003, when I eventually left to join Partech, it has been 2 years where everything was extremely difficult, and I think that was one of the toughest period of my career, actually.
Yeah. Whilst we're on deals, I'm going to bring in the rollover question. I obviously know what this is. You don't, but it's deal related. So what is your I said no to the Beatles moment from a deal perspective?
It's a good question. And it's an interesting question, because I love music, and actually the Beatles were the group I was listening the most when I was young with the Clash, but it's another story. I think that's a question that would apply to a VC investor, in the sense that in venture capital you have all these opportunities in front of you,
Yeah.
and all of them look very exciting, right? But all of them are extremely volatile. So sometimes you say no to a project for certain reasons that are a bit difficult to actually formalize, and then a few years later you discover that you missed Facebook,
Yeah.
In my day-to-day life, things are extremely different, in the sense that things are much more rational, in the sense that we look at these segments, we dig into them very deep, and we really try to identify and understand the drivers of the business, both from a market standpoint as well as from the why a company is successful. So at the end of the day, we are not looking to do a 50 times, so we won't miss the Beatles. But we make sure that all the ones that can generate, 3-4 times revenue, 3-4 times for investments, we are sure to be there, And sometimes we are lucky, sometimes we do 10 times. It's great. That's not what we're looking for. We make sure we never lose money, and that's really what we're looking for. So we are not looking really for the Beatles.
So I think the snapshot, probably the selling statement for this episode is, since you joined Keensight, you've never said no to the Beatles.
Yes.
And what about outside of work? What are the hobby? I feel like everybody in our industry, irrespective of type of firm, needs a degree of pressure release. What's yours?
Well, first of all, my family, obviously. I have 2 kids. My son, who is 18, has just left home to actually study civil engineering in the UK. And I have a daughter at home. So I try as much as I can to spend time with them when I'm not working. And then from a more personal standpoint, I'm a huge music lover. So I have way too many vinyls at home, way too many discs, which my wife blames me for. But that's what I like.
Okay, and then we said we'd come back to Keensight performance as a means of being a differentiator. So do you want to just talk me through that and how you perceive that as an add-on offering for your management teams?
No, I think it's, and thank you for the question, I think it's actually a very big differentiator of Keensight, in the sense that the reason why we created this team some years ago was, I think, as I said, it comes back to the fact that having been operational, all the managing partners, we know that operational support matters a lot to our portfolio companies. And so we decided to create this team, and we grew it quite nicely. I mean, we have now within the team a number of different profiles. We have what we call the value creation directors, who are people that are in charge of defining the value creation plan with the management, of course, and then to make sure it is implemented. Then we have a number of functional experts. So, for example, we have a CTO that helps our software companies to structure their development teams better. We have a CPO. We have a specialist in AI. We have top-line experts like, for example, Kevin, who used to be the ServiceNow EMEA managers. We have people specialized in human resources as well. We have M&A specialists. I mean, our investment thesis is really around organic growth, but we also, of course, do a number of build-ups. Yep. And then we also have a number of more senior operating partners. And we have invested massively in this team. I think it's quite unique, again, to have that many people dedicated to this within a PE firm in Europe. But we'll continue to invest. And actually, we have a very strong recruitment plan on that front as well. And our CEOs really like it. They use it a lot. And within all our portfolio companies, we have a number of our performance teams that are actually involved.
Okay, and next 5 years, what's the plan for Keensight?
Well, we'll continue to grow. We think we still have a lot of room to continue to grow. The market is extremely deep. The objective is to continue to be able to develop even more for money in the companies we look at. As I said, we have this subsector sourcing approach where we spend time on specific subsector that we like and try to identify companies within these sectors. But as a matter of fact, there are a lot of these sectors that already exist, that have been there forever, but that we didn't have time to screen, Yeah. And every time we go into one of these subsectors, we discover companies that we had never heard of before. So the objective is to continue to grow and be able, as we grow, to offer even a better service to the entrepreneurs we back. So that's the plan for the time being.
And of course, you're expecting a call to be president of France at some point as well to that. Okay, it's time for your rollover questions. So if you can write a question for the next guest.
Sure. Thank you.
Thank you very much, Philippe. Pleasure to meet you, and remember me when you're president.
Sure.
All right.
Thank you.